All right, well, hello again, everyone, and welcome out. This is Ankit from Maverick Currencies here, and this is a market roundup for Monday, July the 11th. Let's get down to today's market price action. Take a look at some chart setups and talk about our upcoming 24 hours here. So let's just start with a quick market analysis. Well, we started off with a bit of a negative note. Today, as we look at the equity markets, we did pull back, and interesting thing about today was that it was a bit of a everything sell-off day, because if you take a look at just the numbers, SPX was down, VT was down, cryptos were down, gold was down, and oil was down as well. So you can see there was really no place to hide. There was a bit of a sell-off across the board. The only place that we're seeing an extension is this US dollar, which has continued to cranking up here. So we have to really take a look at dollar, as it seems like it's running ahead of its a crucial CPI figures report that's coming out this week. So overall, if we talk about the markets, and we are actually in this sideways kind of a range here, I think the way you want to look at this market is that we probably see a couple of up days, couple of down days. You want to sell on the days that are closing strong, and you want to buy on the days that are actually closing actually weak. That's actually a very typical price action that we can find in an arrangement price action. So far, you can see that we really haven't gone anywhere for the past month, but in between that month, there has been some highs and lows. So something you could keep in mind as we are in this trading environment that is not really leading to anywhere. So whenever you get this lack of direction, lack of conviction, this is where a couple of up days and a couple of down days seems like the path that we'd likely be on right here. Now, looking at the world index, we're seeing a very similar move. I mean, it's definitely consolidation. They got the support that's lining up right over here at about 83. So at this point, we don't have a breakout, and we don't have a breakdown. I mean, all we have is a bit more sideways price action. Now, taking a look at Bitcoin and the crypto world, and there's no real change whatsoever. A massive consolidation, which has led, which led to a breakdown in June, and we're seeing that the cryptos are in the similar path again. So the only reason, and we talk about reversals, is where we make a higher high and a higher low, and we actually turn higher. Again, that would mark a reversal. Right now, it's a consolidation. So let's not spend too much time on cryptos and spend a little bit more time in currency world, because that's where the biggest movement has been. So as we take a look at the markets again, we kind of brought the scale down to -1. If you just take a look at some of the key metrics, we are above the 20, below the 50, but then we are right in the support range over here. I think this is a typical range of price action that we are likely to see over here. So whenever I see this, we don't want to be committed too strong one way or the other. Of course, the big moves happen here, and we want to be very directional. But when you get this, you don't want to be extremely directional at this point. This is, again, a busy week when we look at the schedule. So I was surprised to see that we started off with quite a bit of a movement that we still have a lot to go throughout the week. Again, starting with the RBNZ, that's due tomorrow night at about 10. So we'll be actually looking at the Kiwi tomorrow and see what the prospects looks like here. And again, very important, we have the CPI on Wednesday. So there's, again, a lot to talk about. You can see there's Bank of Canada on Wednesday. We got the Aussie Employment Report on Wednesday. So at this point, it's better to just keep the powder dry and just take a look at the market price action on a day-to-day basis and just pick the direction accordingly. So let's do a quick currency analysis and actually take a look at the performance that we've seen, the percentage-wise, in cryptocurrency and the foreign currency world. So in the cryptocurrency world, you can see that there was pretty much a sell-off across the board. Again, Bitcoin was down 1.57%, Ethereum to 2.08%, more pain in other less attractive coins like the Bitcoin Cash or Solana. We have the Cardano over here. Really not a biggest mover. Again, we have seen 20% moves from cryptos lately, but this is, again, on the quieter side, but it's definitely more on the weaker side. Now, currency world is where we actually got quite a movement, especially if you take a look at the dollar. I mean, dollar already look extended, and again, Rob talked about it, his outlook in the currency room. Again, so far we were remaining bullish on the dollar, but I think we probably have to reevaluate this on once we get the CPI numbers out and see how the dollar reacts to it. But right now, I mean, it seems like the dollar is where it's kind of catching the bid, so we have no real reason to think the dollar is done its move yet. We have to see, every time we want to see if the move has come to an end, we need to see some signs of exhaustion or some signs of reversal, which we don't have yet. Swiss franc did jump a little bit again after last week's underperformance. We've seen a bit of a rally here. We'll take a look at Swiss franc and see if this actually turns into be a shorting opportunity. But we are seeing a bit of a divergence between euro and Swiss franc. And at this point, I'm seeing not a whole lot of bullishness as we've seen in the Swiss franc in the past few weeks. I think there's kind of taking a back seat here. Pound was a bit of on the flat side, and then here we are, Canadian dollar actually being strong. So this is actually a tricky one. I know Canadian dollar has been following mostly the US dollar, but again, Canadian dollar has been very resilient considering this is still a growth currency so far. Look at the divergence that was taking place between Aussie CAD or Kiwi CAD. These are 1.5% move, and even Aussie dollar was actually the biggest mover, which again, it's looking at almost moved about 2% today. So Aussie, again, what we're noticing is a bit more of a wider range in volatility. Aussie dollar has been running 1.5%, and then here is falling 1.5%. So expecting some wild moves to continue as we see a little bit more volatility in the currency market. But outside of that, Kiwi was actually on the quieter side. Again, this could be just because we have the RBNZ that's due tomorrow. So leading up to any central bank events lately has been bullish. So I think we don't want to be too bearish going into a central bank event. But once we are out of that central bank event, we can actually kind of resume the trend that's actually been in, or see if that could mark a bit of a reversal. But right now, I'm not really seeing any reversal. That's the thing. There's not a whole lot of regime change that we are noticing. Things are continuing on the same way. Sometimes the CAD take a pause and then rallies again, the dollar take a pause and rally again, but not really seeing things where, the CAD is turning from an uptrend to a downtrend. We're not really noticing that, and we're just seeing a continuation of what we have seen in the markets. So as the velocity scores, you can see there's quite a bit of things on the +3 to a -2. That's where the biggest move is. So we'll take a look at today the euro dollar. Again, it's actually moving very fast towards the parity level. We have the CAD, which is Aussie CAD, again hitting new lows. Euro CAD was actually down quite nicely as well. So we'll continue to pay attention to these euro crosses. I know Swiss franc is on the +2 side, but I'm not really committed +2 on the Swiss franc. I think you can easily move towards +1 to then to a -1 as well if this rally doesn't hold. Interestingly, so the yen actually stayed flat, although we had the dollar yen actually hit a 24-year high. The dollar hit the highs against the yen for 24 years high, but right now you can see that was not really because of the yen. It was because of the dollar strength. Now Kiwi and pound, that kind of stays in the middle, so we have to evaluate these and see which way it wants to go. Like I said, we have the RBNZ tomorrow, so this likely to move one way or the other depending on the stance from the RBNZ. Are there any surprises? The Kiwi has been actually one of the most underperforming currency in the G7. If you take a look at how aggressive and hawkish they have been, it's very unimpressive to see the Kiwi actually underperform so much. So I'm not sure if this can revive some of the strength in the Kiwi, but so far we don't want to be bearish going to a central bank event, so we'll have to take a look at it tomorrow. But meanwhile, let's take a look at possible trades and see what we can find at this point, because after a big move in the markets, we start to see a lot of consolidation, which again, I don't like. Once we start to get that big move, we need to see some consolidation. We don't want to enter right away, and we're going to jump on a lot of pairs that actually just consolidating here, which means that it just needs to take a time to breathe here. Look at the Aussie dollar is moving in this up and down fashion. 2 days down with 2 days up with another very big day down. So this was I think the biggest day down starting or going back this level here. So a lot of bearishness that we were seeing in this pairs since it actually broke that very important level of support at about 70. So this thing has been slowly, steadily moving lower. But let's talk about setup here. So what setup do I see? Well, right now we're seeing a bit of a fall. We need to see a bit of a base or rally. Even though if I go on an hourly chart, what we notice is that we just see a bit of a breakdown, a bear rally, and it's not really ready to move out yet. So if you're looking for continuation patterns, again, always look for those levels to break if you're looking for continuation. But we could see some sort of consolidation, especially after seeing such a big move from the dollar. Especially, let's take a look at dollar basket first. I mean, I know I've had a lot of questions about the dollar, and you can see dollar is on a path to the upside, but it's been actually on a slower side here. Again, we see this big move over here, but with the 3 days of consolidation, then we got a big move over here. So it's not really moving the way it was moving right back here, or the way right back here. It's moving in this consolidating small back and forth way, but it's the path is certainly towards the upside. So at this point, not really seeing any sort of reversal signs yet. On a basket, you can see that we are slowly climbing to these COVID levels. Again, on a basket level, not on the DXY level, which is really the Euro USD. Majority of that is Euro USD, but this one is actually slowly climbing up without really any sign of capitulation or any exhaustion signs yet. Now, if we take a look at Euro USD, I mean, that's where you're going to see that, yes, this has broken down to levels. And again, if you've been trading for a while, I mean, I've never seen, this thing trade below in my trading career. And I'm pretty sure this is a very similar kind of case for a lot of traders that, has been trading for maybe even 5 or 10 years, not able to see that. So at this point, the path of least resistance is towards the parity level, and as we break that parity, again, we have to. At this point, this is catching this on a reversal is like catching a falling knife. Not advisable, and not something that we can actually come to fruition like right away. We need to see the reversals sign or a capitulation sign. We don't have either of that yet. So at this point, I think it will continue moving lower. I mean, take a look at how weak the price action is, that it actually stays below and it's not really giving us any sort of bear rally. So if you missed a move, look for consolidation patterns. You look for some sort of bear rally patterns. But in a weaker price action, this always becomes tricky to jump on when the price action looks so extended and you think, yeah, how much more it's going to go. But then next thing you know, it just continues falling. So, I mean, we're seeing a very similar thing with the CAD as well. As you can see, the CAD has been just running up and up and up. And if you take a look at the intraday chart, you'll find that there's not a whole lot of pullbacks that you're finding here. I mean, very much a one-way move. And I'm not really a big fan of trading, one-way moves all the time. I like to see things go back and forth. It gives an opportunity on both sides. But this thing has been, again, it's very similar to what the dollar is doing. It takes pauses in between, and then it rises, and then it's just going to take a pause. So when you're trading with the one-way currency, just realize that when is it taking a pause, you don't want to be just looking for reversals. This thing is holding, and any sort of reversals, any sort of pullbacks are quickly bought out. So not really seeing any regime change. And interestingly, if you take a look at dollar CAD, which has been the currency pair that I've been watching, I mean, a lot of the dollar crosses have actually broken. This is the one that's not broken, and it seems very resilient with this correlation here. I mean, look at the reversals. I mean, this 130.60 is a very strong level of resistance. So I think as just exactly what we saw back in this Aussie dollar, when it breaks that level, there's going to be big moves. I think the dollar CAD, it will be on the same path when they start to diverge. But again, right now, interesting enough, they're not diverging, which is kind of odd because some traders are looking at some of the reversals in CAD because, hey, I think the oil is actually pulled back. I think that will lead into weakness in the CAD. But right now, we are not really noticing that. On the other hand, we're noticing some very decent patterns like Aussie CAD. I mean, take a look at that pattern here. I mean, we are now breaking to new lows that we're actually getting back into these levels that we were back in 2020. So quite interesting that we are now very directional, moving in a way. I mean, again, even though if you see the break happens, I mean, look at this pathetic little low base. So, I mean, you don't even see a bit of a rally. I mean, you're just seeing a lot of bases, which means that it just, at this point, it's back to the July lows and it looks like it wants to go lower. So, as if the market stays negative, I think that will again continue to put pressure on currencies like the Aussie, which is now moving along with the risk sentiment. I mean, there was a time when, you know, the Aussie did not follow, or the markets did not follow the negative sentiment in the markets. And again, this is where it's all about doing the right thing at the right time. As you can see, if I take a look at the SPX, actually, let's try that once again. And you can just do that comparison and then see, well, it's not always the case that it's going to be continuing to stay as uncorrelated. Sometimes we get that correlation, sometimes they are not. And right now, you can see, like back in March, that was the bit of a puzzling part for traders when the markets were down and the Aussie and the Kiwi was up. Now we are seeing similar price action. You know, we're seeing the risk trends are moving along with this with the growth currencies like the Aussie here. So I think if the market goes up tomorrow, we'll probably see a bit of a reversal. So you have to be prepared for understanding when things are happening, when things are changing, even though they're happening on a short-term basis. But once things are moving against, then it's better to take a bit of a step back. Euro again has been the hot topic, so let's talk about Euro. I think Euro still looks pretty weak to me, and again, it's not about the Euro dollar. I mean, Euro dollar, of course, looks extended, but if the move is happening somewhere else, we can always take a look at other currency pairs. I mean, if we go into Euro Aussie, if you try to look for any sort of bounce here, again, I think I like this support at 148. If it breaks that, I think this is a good candidate for a further breakdown. Same thing. Tomorrow we have the RBNZ Euro. I would like to take this look at against the Euro Kiwi just to see what the pattern is. And you can see, like the Euro Kiwi is in a downtrend. So it's just a matter of finding strength in Kiwi. I think this could actually easily break lower. And if it breaks that 163.75 level, this has a lot more further downside risk. As you can see, back in April, it was sitting at about 157. Again, for that, we need the Kiwi to perform well. We need the Euro to underperform. So the question really is that is Euro is the next sort of target? I mean, if you take a look at this year, there have been targets. Like we have seen the dollar, which if you look at it, the entire first part of the year, it was consolidating. And then it broke on the basket, and then it continued, and it became very directional. Again, we've seen the yen do the exact same thing. You know, the yen looks pretty similar to what Euro is doing. Not sure if this will be the kind of similar price action will follow, because we still have the ECB press conference to follow in just a couple of weeks. And if they do make changes, we see Euro maybe rally a little bit. If it doesn't, I think this will kind of follow the same path, which is following the policy divergence. So you can see it was a sideways range, and when it breaks, it actually became a lot more directional. I mean, Swiss franc, been the same thing. It became directional once it broke that resistance. So now the Euro is on the same path here. The question is it ready to become active as it breaks that support? And it could actually, as you look at it, we're starting to test these levels. And at this point, even though if I go on a 4-hour chart, as we are just sitting at that level, I mean, it looks like it wants to move lower. So I think at this point, we can diversify some of the Euro pairs and then take a look at dollar, Euro dollar, but also take a look at Euro Kiwi, Euro Aussie, even Euro CAD, some of these currencies that are so you're not really concentrated all into one currency, but you're spreading out the risk. You can see that it continues to move lower. So again, this is what I'm looking at. Again, for tomorrow, another important pair that I've been watching is Aussie Kiwi. I mean, take a look at it. Aussie Kiwi has been enjoying this divergence that's taken place. Again, these are two very correlated currencies, but they have been uncorrelated, and we started a nice move here. As we got the RBNZ tomorrow, we'll see if it can break that 109.50. I think if it doesn't break that, we'll probably stay on the sideways path. I mean, so far you can see this thing has gone sideways for the past 2 to 3 months. So for this to either break higher or lower, we need to break above 110 or 109. But at this point, just hovering around it. So we're not really seeing these V-shaped movements as we saw back in these previous charts. We are seeing this bit of a consolidation that's taking place here. So the most obvious places is where the movement is happening, and we're not really getting any reversals or any surprises out there that could lead you to a good risk to reward trade. But so far, just continue to follow the trend, continue to follow what we're seeing in the markets until there's a regime change. So lack of conviction could be difficult for some traders because we need convictions, and sometimes if you're trying to get these back-to-back trades or back-to-back continuation moves, we need conviction. And if there's no conviction, just take it day by day and pair up relative strength versus weakness. So tomorrow again we'll be meeting for RBNZ and we'll be updating the outlook. But till then, take care and happy trading.